really excited to be part of this incredible group of women. How great is it? When I first started trading, there was so few of us. I mean, if we were kind of hiding out. So now to see so many educators is really, really impressive. I'm really enjoying being part of this beautiful group. So I'm going to begin today with, first, this is me. Hi, I am Marina, and I am the Trader Chick. And today I want to talk about 4 steps to analyzing the live market for high probability trades. So one thing, my charts have not been, not a really good thing right now, but they cannot load. So I'm going to close them off, and then I'm going to start them again. Just so you guys know. If not, then I'm gonna have to kind of troubleshoot and do some other cool stuff for you guys. But yeah, they're completely been jammed for the past 20 minutes. All right, so regardless, I'm gonna begin because a lot of this we could definitely learn while I am showing you guys the charts and my course overall. Okay, so I'm going to begin with 4 steps to analyzing the live market for high probability trade. All right, so what I want to cover in our presentation today will be understanding market movement, using indicators for the best entries and profit targets, reading the live market and spotting trade setups if we get my charts up and running, and how scalping helps you become a profitable and a confident trader. So I just do want to do more of a formal introduction about who I am, and just to kind of give you guys more of a personal look of who I am. So I'm Marina, the Trader Chick. I am an expat living in Antigua, Guatemala. This is my family. My husband's Guatemalan. However, we were first living in Costa Rica. So we've been Central American expats, or at least me, for over 18 years. Both of my kids have been born in Central America. So I am trilingual. This is a little fun fact about me, but it is actually a really important fact of which I didn't realize until much later into my trading career, why it was such an important part of my understanding the market. So I'll get into that in a few minutes, but I'm trilingual. I am actually originally a refugee from the USSR. I came over to the United States 41 years ago. So I speak fluent Russian. Even though Russian is my mother tongue, it is not really my native language, right? Because I have been living in the US. I pretty much was raised there since 6 years old. So English is my home language, is what I really understand. It's my main language. And I speak Spanish fluently because, like I said, we've been living in Central America now for 18 years. So although I am a lazy Spanish speaker, we only speak English in the household, even though my husband is Guatemalan. But my entire life around us, more or less, is Spanish. So I am completely fluent in Spanish. We are travelers, and I'm not saying that like, oh, I love to travel. Travel for me is not a luxury, it's a necessity. So everything I do in my life somehow has to revolve around travel. So I always had to look for careers or businesses that will allow me to have this independent lifestyle of that I can travel and work from anywhere. And actually, before I became a day trader, I was a fitness instructor and a travel writer. So I actually started my online businesses over 12 years ago with this website, my travel blog, Travel Experta, which it pretty much talks about all our different travels around the world, and it's still going. I still love my Travel Experta site, but it's just been there now, and trading is pretty much my main focus. So if you guys want to check that out, you're welcome to see the other side of me. But trading definitely is a great way to be able to be independent, and that was something that I really, really, really looked for when I started to, I guess, zone in on trading and really wondering if it's for me, and day trading mainly. Obviously not investing, I do that as well. Investing, you don't really need to really focus as much as you do as you would with day trading, right? So hang on one second. I want to, oh, you know what? Mike, the chat is not opening for me. Oh my God, I'm sorry. I think there's something going on with my computer. It's totally jamming on me. Yeah, I can't open the chat room at all. And I think there's some questions for me. Yeah. If you guys could tell me what the questions are, that would be great, or maybe show it to me. I'm not sure what's happening. I feel really bad.
Are you able to see the
Yeah, I have the bar and I'm pressing on the chat and Alt H and nothing. So I think that's also part of the reason why my charts are simply not working either. And I've been playing with my computer for the past several hours. It's been acting up on me. You see, I want to close this as well, like my Ninja Trader, and reopen it again. So I don't want, I don't want to screw this up. I'm sorry, I totally am losing the flow here. But let's get into the presentation, and if somebody could maybe read out the questions once in a while, I would really appreciate it. The chat isn't opening for me. Okay, tech problems, very fun. All right, so let's go back to the basics of building your trading foundation. So this is really, and honestly, everything that I will be showing you guys today, you could learn without the live market, because I just wanted to show you how to do it in the live market, but I'm using charts as a way to show you, so don't worry about it. So what I do want to do, like the whole presentation is actually a free like cheat sheet that I want to give you guys, that you will be able to use everything that I use for your trading. So you could get it if you just download it in makingofadaytrader.com. So you could go there, and this entire presentation, more or less, with my charts and everything I'm going to be showing you today, is going to be well, it's going to be at your fingertips. So that's literally what I am. It's completely free. It's a gift for you guys. So please, if you want it, get it. And then this way you could also apply it. And I would love to answer any questions you have. Like, for instance, when you're reading and be like, hey, Marina, I don't really understand that. Please email me, and I'm happy to talk to you guys about it and help you with that. All right, so we're going to get started. And again, what I'm showing you now is in that cheat sheet. So remember, if you go here to makingofadaytrader.com, you can get this right away, completely free for you guys to be able to kind of use along when you trade. All right, so let's begin. Market movement and the breakout of a trend. So breakdown of a trend, sorry. So it's really important for us to focus on some specifics of the market, right? We all know that there are three very specific trends, right? We know that, we logically understand that, we get it. We totally know that there's an upward trend, and we totally know that there's a downward trend. And all you have to do is look at the market the past week and a half, and you know that we're in a massive downward trend with a couple of little spikes here or there going up. But overall, it's been downward trend, right? We haven't even had that much of a sideways trend. But the reality is, first of all, day traders, not like intraday traders, we can make as much money going down as going up. So for us, it doesn't really matter if the market is going up or down, as long as we understand what the market is telling us, right? If you're a longer term investor, like right now, I mean, my portfolio, which is my long-term investment, is definitely taking a hit. I'm also not really, I'm not a panic trader, which a lot of times, you know, that's why there's massive sell-offs. I know that this is going to blow over for the investment part of it, and I'm waiting for it to go back up again, right? However, sorry, you see, it's just doing this completely on its own. And okay, there we go. I thought my computer totally got stuck. But for day trading, I don't care if the market is going up or down. I do care, though, when it is in a sideways trend. And this is something that I want us to really focus on. First of all, so let's take a look here on the left, right? This is a very obvious upward trend, right? It's definitely going up. Each pivot is higher than the other. The same with the downward trend, right? Each pivot is lower than the other. So it's a very specific, very defined downward trend. So what exactly is a sideways trend? And this is something something that honestly I could say that when you start to spot sideways trends, it will make all the difference in your trading. Because what is a sideways trend? If you think about it, it's an indecision area. It's a slowdown, right? It's a place where the overall people in the market, or however you want to call them, the players or the big players of the market, this is when they're kind of indecisive. They're not sure what's going on. It's not for us retail or individual traders to really care as much, because we don't have that kind of pull, right? If we go in with a few contracts or buy a few shares, we are not going to move the market. We do not have that, right? So we cannot predict nor really care what the market is going to do. But what we do care is reading what the market is about to do. And that happens through a language that the market gives you. And that's kind of the reason why I attribute my trilingualness, because after trading for quite some time, maybe 1 or 2 years, and I was failing, colossal fails, just losing money. I just wasn't giving up. I was too stubborn to give up. My husband thought I was completely nuts. I decided after a massive loss that I was just going to go back and start to read the market, just watch the market. Something that a lot of times we don't ever do. We don't actually ever read, just watch and start to read the basics of the market, the language, right? And that's when I started to recognize there are certain very specific things that happen when the market, it talks to us. It actually has a language. And the language comes through support resistance areas, divergences, reversal patterns, everything I am going to show you right now. And that is really what makes all of the difference in your trading. So consolidation areas and transition areas, right? These are what are basically the sideways market. These are a trader's worst enemy. And if we don't learn how to spot them and avoid them, we can really get caught up in them. And that's where the majority of the losses happen. So how does that work as far as why these are literally your greatest enemy? It's because of this, right? We have a very specific upward trend going. And then all of a sudden we have this indecision area. So quite a few things happen during this indecision area and this time. Okay, so let's talk about it. When we're in an upward trend or downward trend, this could be identical, does not make a difference. We have a flow, right? We see that the market is moving, and this is most likely where we can take the most amount of our trade setups. However, when we get into a sideways movement, in the beginning, obviously, we don't realize that it's a sideways movement, right? So we still start to enter, and then we lose because the market isn't really going anywhere anymore, right? However, what happens to a lot of traders is this. They're seeing that it's been a strong upward trend, and now they kind of get an idea that the market is kind of just taking a breather, or it's I guess in that indecision time. And what they want to do is they want to predict, right? So they're seeing that the market is a strong trend running up. And what they're saying to themselves, and this is when the mental games really start to mess with you. They're looking at it like, okay, well, the market's been running up all day. It is going to continue going up. It's just taking a breather, but it's going to continue going up, and I'm going to take it. I'm going to get in and go long. Or the other thing that could be going through your head is, right, the market's been going up all day. It needs to correct. It's time. Are you kidding me? Can I go anymore? I'm going for a short. It's going to completely correct. I want to be in it to correct when it starts to go the opposite direction. So these are valid things that go on in our heads, but who are we to say which direction it's going to go? We can't, right? So what we can do is be like, okay, this is a sideways movement. And do you guys know what the 3 most important positions are in day trading? There's 3. There's only 3. 1 is when to get in, 2, when to get out, and 3, and to be honest with you, I think is probably the most important one, is when to sit out. Yeah, sitting out is probably as big of a position as not as being in or getting out, because a lot of times we could start doing these mini predictions or, pretenses that the market is going to continue, because we know, like, how would we know, and get in. And this is where the majority of the losses will happen, to the point where all of your gains from the day will probably be lost in these consolidation areas, or even go into the negative zone, right? Because then we could cross over into a really bad place called revenge trading, and just a mental disaster. When you start to lose, it really sucks, right? So we know that, and all these other horrible things start to happen in our brains. Okay, so what I'm going to teach you guys today is reading the markets, but really understanding when these happen, so that you know when to sit out, and also when those real breakouts, when that real movement actually happens, so that you could enter with confirmation that the market is going to head in that same direction. And that's it. That's the most important thing, right? I'm an insanely conservative trader, as far as I probably only look for like 1 or 2 trades, and usually it's in the beginning of when the market changes direction or has a breakout. So I'm going to show you all that. Okay, so how do we understand when these start to happen? The market respects areas. It loves areas. It revisits areas over and over and over again. But if you do not know what those areas are, unfortunately, there's no way you will be able to understand when it has hit that area, to be able to either know, okay, this is an area that has been respecting and I need to get out, or it's an area that has been respecting, I need to sit out, or whatever. But if you don't know what those areas are, there's no possible way for you to be able to adjust your trading properly, right? So this is what we're going to talk about right now. Areas. All right, so there's 2 really important areas. Resistance area, or I like to call it the ceiling of a trend or even a channel. It's literally where the market is hitting, going upward, right? It's hitting in this way. So when we first, resistance areas are usually I like to gauge it as like 3 or 4 pivots that are hitting in the general vicinity. It is not super precise. It's in a general vicinity. So just so you guys kind of get an idea, you see these grid boxes? To me, this is 1 point. So just to give you a really quick viewpoint of what I trade in the market that I look at, this is the Emini, which is the Standard & Poor 500 index in the futures market. So what that means is, in the futures market, it's a little bit different than the actual index. You can't really trade the actual index. I don't think anyone actually does, right? So there's these ETFs, which is the SPY, and that is like a stock. So you have to buy positions of the SPY. In the futures, you don't buy positions, you buy contracts. You go in with a contract. And for me, because I am a very small targets trader, which is a scalper, I look for 1 point hit. So if I'm looking and I see that there's massive confirmation happening, the chance of it hitting my 1 point is really high. We're talking like 85, 90%, right? So, but I have to understand when that is and how it works. So each of these grids is 1 point, okay? So if I'm seeing that the market is hitting, and you can see that my resistance area or my overall areas, they're approximately 1 point, right? So it gives me a really good gauge around that. Like even this right here is still part of that resistance area. It's still in the vicinity of hitting it, and the market, as you can see, is really respecting this area, right? I mean, it is just not budging through. So I have to know that as a trader, that this is an area the market is respecting, and I just don't even bother. Like if it's too close, I don't even bother. If I'm like around here, I wouldn't even think of getting in. But maybe around here, because it is a new trade, a new trend, mini trend, because I am looking at mini things rather than grand scale, because of my target is such a small target. So I could look at these smaller trends. I would definitely be looking, depending on the other elements, if this is a good trade for me to get in on, right? So this is a resistance area. It is where the market is hitting a ceiling over and over again. Then we have the exact same opposite, the support area. It is the floor, right? So you have this beautiful trend headed down, and all of a sudden it starts to hit a floor. Obviously, when I'm here, I don't feel that it's a floor, right? I don't know that yet. But then when I'm starting to already draw in my area, because I already had several hits here, and then look at this. I mean, the market is loving it to the exact precise area, right? So when it finally flies through, I'm already prepared, watching all of my elements. I have like a green point system, like, so I have to have everything lined up. So when it's flying through in the very beginning of a new trend, I know I'm ready for it, right? And I'm going to explain that a little bit more in just a little bit. Let me just do a really quick check to see anything's changed with my charts. And unfortunately, absolutely nothing has changed with these charts. I don't know if it's going to work. I'm so sorry. Sometimes I just don't understand why it does what it does. Okay. So here is a channel. So channel is a really strong sideways market, right? Now that we understand what resistance and support areas are, we can start to put them in and really understand, wait a second, this is a really strong support, a really strong sideways market. However, because like I mentioned, I'm looking for the smaller hits, smaller trades, targets, this could be a possible tradable channel for me, because if I look at it properly between a resistance support area, I might actually consider maybe one or two trades here or there. Nowhere ever near. Like if I'm around here, definitely not, right? If I'm around here, definitely not. But if I'm here and the market's been respecting this area, I would definitely consider it as an opportunity, right? As a place where I would want to get in. Okay, so one thing is already seeing that the market is in the sideways channel. How can we understand when that channel is actually beginning? And that is really the most important part, right? Just because a support and a resistance area is happening at this point, when it already is, it's already several hits to it. So how do we know when it's actually happening, right? And that is called reversal areas. I love reversal areas. I am incredibly loyal to reversal areas, and even more so when I see divergence happening. Okay, so divergence happening. What is divergence? First of all, before I go into the divergence, I want to explain to you my actual charts so you guys understand what I'm using and how it's working. So as I mentioned earlier, I've been trading now for almost 8 years, like exclusively. So the first 2 years were really, really complicated for me. And after losing a lot of money, I decided to kind of take a step back. So during those first 2 years, I was in all these different academies, following strategies of these, I guess experts, I'm not even sure. So a lot of times what happens is that they show you a bunch of indicators and they really push you to go for like these really big targets, which on paper sounds great, right? Oh my God, I just hit, a $300 target. But when you're going for that kind of a target, chances are you're putting in at least 50% of it, if not more. So you have to have at least $150 to $200 as a risk. And this is usually per contract. So a lot of times in futures, people go in with, 2, 4, 10 contracts. So we're talking a lot of loss, a lot of money, right? Also, I had like 10 different indicators going on. My brain was in overdrive all the time. I was constantly in analysis paralysis, and it was just constantly like I was constantly freaking out, totally doubting myself, because I didn't have a grasp of what the actual market was saying, right? And the market, like I mentioned earlier, has a language, it talks to you. So I didn't even know what those were. And whenever I saw like there was some divergence or like reversal patterns, which I'm going to show you a little bit more, and I was asking about that, and people are like, no, just this is what I say to do, and just do. And so basically I was kind of driving in my car, You know, like when you first begin driver's ed, you have a teacher that sits next to you, and instead of the teacher showing you to be able to completely be dominant of your car so that they could eventually get out of the car and you drive on your own, I felt like I always had the instructor not teaching me but telling me what I have to do without me actually learning what to do. And that was a really big issue for me. And on top of that, I had all these indicators and then going for these huge targets that I was just losing my mind. So when I came back to the market, back to the charts, because you know what? I just couldn't stay away. It's like, I call it an itch. We day traders, we have this weird itch, right? Like we just want to learn how to trade, and because we know we could do it. So I came back and I ended up stripping my charts entirely. I had 0 indicators. I went from 10 to absolutely just bare naked charts. And that's when I was really starting to watch it. And I started to understand certain things, like how it moved and whatnot. But with trading, you do need a couple of indicators, or at least one, right? The reason why is, think of yourself as an archer. So if you're an archer, have you ever noticed that people, you know, like, let's pretend we're watching an archery competition, all right? They always have a place to stand before they throw their arrow. And this right here, you guys are seeing there's 3 indicators right here. They're actually the same indicator, only with 3 different time periods. This is an EMA line. My red EMA line is my main EMA line. It's the 52 period EMA line, which is the 52-year EMA line, right, which is an exponential moving average. And then I have a little bit of a smaller time frame, and then I have a little bit of a larger time frame. So this is where I throw my arrow from, because when I notice with the bare naked charts, just because a bar is going strong, like this is a great example, does not mean it's going to continue, right? I can't just go in blindly. That is just completely crazy, right? Like you would never see an archer just walking around a field and just start throwing arrows from wherever. They are very specific where they take their arrow from, and then also very specific of what their target is. So that's when I decided I cannot just go in blindly and just start throwing my arrow around like, here, oh, there's a big one, boom, let me throw it. I don't even know what that is. So that's when I put in my EMA lines, right? I have 3 very specific EMA lines, and my deep red solid line right there and my purple one. Those are my 2 lines that I take my trades from. So basically it's like this. Here I am in this mini sideways movement. Look at this. I'm going to get into this indicator in a second, right? But regardless, I already have this reversal pattern happening here, which is like a mini support area, right? So I have here, and then it crosses over, and then I want to put my order waiting to come back here, because I'm recognizing that this is not a resistance area. There's nothing really going on. It keeps on making higher highs. So I want to stand with my arrow at the particular EMA line right here, right? And then shoot for my 1 point. Now, this is really important to understand, that you have to have a place where you take your trades from. You as a day trader will never, ever go in at market. So what does that mean, right? So as a futures trader, for instance, when you go in at market, you usually lose a little bit of money if you're like a stock trader, right? So for instance, if Apple is selling at 200, you go in, you probably might get it for a little bit more, simply because it's that bid ask separation, right? When you trade futures and you go in at market, it's called slippage. So slippage is for each one contract could be up to $12.50 that you can immediately lose, and like that, right? So I always have my order waiting. So if I already see that the market is going to be going in one direction, so let's say if it goes here and I'm seeing that it's going through here and it's working well with my under indicator, I will have my order waiting right here, because I know that this is where I'm going to be taking my shot from, right? So I have an order waiting. And when it comes to me, it fills me exactly where I want it to be filled. It is not just, oh, wait, it looks good. Boom, let me get in. Never. I am already sitting and waiting for my orders to go in. And that's exactly what happens here, right? So what do I have as my other indicator? Right here below, these are the MACDs. I love the MACDs. I find them to be the least lagging indicator overall. By the way, everybody, these are 100% free universal indicators on any charting software, any. Okay, I use NinjaTrader, and honestly, NinjaTrader is really fantastic. So today, I don't know what is going on with my NinjaTrader at all. But normally it is a really fantastic, and I'm not here to sell. I have nothing, I'm not affiliated with them in any way in that respect. It's just what I personally enjoy using. Regardless. So again, any charting software, it could be Thinkorswim, it could be Sierra Charts, it could be a charting platform. I mean, any charting software that you use. And if you don't use charting software for being a day trader, you're not a day trader. I know that's a little bit blunt, but you're not. You can't say you're an artist and not have a canvas in front of you. This is where everything happens. And if you don't have a chart, you can't possibly be successful. Again, you could choose whatever charting software works for you, but you have to have a charting software. So once you decide on which charting software you want to use, these indicators are 100% universal. So it's nothing to pay extra for. They are in every single charting platform. EMA lines, which is literally exponential moving average, and the MACDs. So the MACDs are, this is my MACDs. And to me, I find them to be the most concise, I guess, the most in the moment, right? So for instance, here, this is when I'm already understanding. Like I said, I don't look for huge trends. For me, smaller trends is really all I need for it, because I'm only looking for one point, right? So I have this trend happening, and then all of a sudden, look at this. The market is going down, but look here, this pivot, and then when I see this pivot, look at that massive divergence. What does that tell me? Right away, this is when I know, hang on a minute, there is going to be slowdown in the market. I don't know if it's going to be a long slowdown. I don't know if it's going to be just this particular one and it's going to end up stopping me out, which, by the way, I only look for one pointer, so chances are it does, right? Look at that. Totally would have stopped me out. But I already know. And then it continues to be divergent. Look at this, right? And look what happens. Boom, it completely changed direction, right? Again, I don't know when it happens, but what I do look at here, you can see right here is a dotted black line. That shows me that this is the zero. This is the neutral line of the MACDs. And like I said before, I don't care if it's going up or down, as long as I have strength and my elements are lined up. And look at that. Look how far now it is here, right? It's not hanging around the zero line anymore, bouncing back and forth. It seems to be continuing up. This is when I start to look for my entry. This is the beginning of a new trend. So let's go a little bit further here. All right, so here we have a pretty significant move. Look at these, look at that spacing, right? This is exactly where I want to be all over a new trend, right? So here, I'm not showing it right there, but for instance, right here, we have what I'm calling is like these reversal patterns, right? The reversal pattern here is a double bottom. There's two of them. I'm not showing you this one, but this one is just as powerful. So this one's just a little bit easier to spot, right? So I have all of this movement going on, and then I have, first of all, I'm already being divergent, right? I'm already being shown that something is about to happen. And then I see this reversal pattern, right? It's a perfect double bottom. And on top of that, it is complete divergence. I am totally staying out of this trade. Like, I don't even want to be, I don't want to be anywhere near this market right now. Why? Because I know that there's something going to happen. It could either be a change in direction. It could be a total sideways area where I've learned a very hard way will eat all of your money, right? So when I see this, I'm nowhere near this particular market anymore. I'm sitting out until, look at this. Now it has flown through my EMA line. Now, because of such strength and such a massive movement between the zero line in here and there's no divergence, I am waiting, right? I am waiting. Why? Because this is showing me that this is the potential of a brand new trade. And when, I mean, a trend, potential of a new shift in the market. Okay, potential. With trading, there is nothing 100%, right? But the chances of this is over 90%. And I know that because I have studied the market for so long, right? So let's talk about a new trend. Think of yourselves when you want to go and you want to go jogging, right? All of a sudden you're like, you know what? I want to start jogging, or you are jogging. You get your jogging shoes on, you open the door and you get out the door. What happens with you? This is when you have the most amount of energy. This is the most, when you have the most amount of excitement, right? So the chance of you going for 1 mile is really high, right? Rather than when you've already been running for 3 miles, there might be a chance that you might decide you don't want to do anymore, right? So this is the beginning. This is running out that door and barely even retracing back to my area. I know that this is going to continue at least for that one point that I'm looking at, right? And that's really what it's about. And this is how I start to gauge sideways movements and when there's a potential for the market to change direction or go into a complete consolidation, right? This is, here it is, it's again. So I want to talk a little bit about Head and Shoulders. I'm not a huge fan of them, but a lot of people use them. I use it as an extra confirmation after the other stuff that I just showed you. Why? Because what is a Head and Shoulders? So you're going down, let's, in this case, it's a downtrend, right? You're going down and you have this pivot, and then you have another pivot that goes even further down. But all of a sudden you have another pivot and it doesn't even go as far as the head. This is showing you that, wait a minute, it's about to reverse or it's about to take a massive slowdown. I want to show you this mini area right here. So we've had this downward trend, right? It's a little bit of a Head and Shoulders. It's definitely a mini support area. And then it changes direction. So we have this pivot, then we have another pivot, right? So at this point, I don't even look at it as a Head and Shoulders. I'm thinking, okay, now it's going to be changing direction and whatnot. Instead, I get a shoulder. So this is kind of that reconfirmation that, wait a minute, it doesn't really want to go there. I'm going to wait it out and see what it does do, right? So that's kind of how I use Head and Shoulders. They are not my end all, do all. I prefer the reversal patterns, right? So let me just see if anything's changed with my charts. No. All right, we're just gonna go with this particular, with my presentation here. And again, you guys, please go into Making of a Day Trader. You will get all of these slides and you could use them when you are trading, and just spotting these things will change your trading game. Guaranteed. I don't know if you're going to be making more money or whatnot, but at least you will have a lot more control of your trading, right? Like that is going to be crucial. So let's actually talk about a really powerful trade, which I love and use, and also for you guys to understand how this is really useful in the live market, right? So we have this pretty strong movement going up, right? And we have this massive resistance area that is forming, right? And all of a sudden, the market flies out. So this is actually a channel. I know I didn't draw in the support area, but because I wanted to focus on this particular breakout, but this is a channel. Okay, so what did I mention before, right? So here is a new trend. Chances of you running that first mile is super high when you get out of the house, right? Then imagine you've been running for like 3 miles and you're like, oh, you know what, I'm getting a little bit tired. So what happens is right here. This is what, let's talk about this area, right? This is that consolidation area, that slowdown, that indecision area. So now you're like, all right, you know what, I want to get some water. So you stop, you get some water. Then you want to fix your shoelaces. And then you're kind of in, you know, like, oh, should I go? Should I continue more? Do I have enough energy? Maybe you'll throw in a gel to give yourselves a little bit more energy. So what happens when you give yourself that extra boost? Chances are you could probably put in another mile, right? With that enthusiasm. It's a pretty good chance. So what happens? This is that breakout. That's what I call a breakout trade, right? It's not a new trend, but it is a new invigoration, I guess, or a new infusion of energy into the particular trend we've been going, right? And that's where I always look for a breakout entry as well. I love these particular types of trades because I know that I will at least get my 1 point in, right? So please get your cheat sheet. It's all here. Go to makingofadaytrader.com. Okay, I think that, yeah, I go into the actual live market here, which at this point is not really working well. So what I'm gonna do is I will take you guys to a few charts that I used a lot that you guys could take advantage of. And again, remember, makingofadaytrader.com. You guys could get all of this. All right, sorry, my computer is not working very well. Let's go here. So I'm going to show you another presentation that I have. Oh, here we go. All right. Let me just get through all of the other slides so that you guys could see pretty much how it all works. Just give me a couple of seconds. I'm apologizing, but sometimes tech just really mind boggles me because I don't understand. Regardless, let's look at some of my other charts. Hang on a second here. And I would love to hear your questions. I don't see any, but maybe if you do throw in your questions, just David could read them off to me if you guys do have any questions. I'm really happy to answer all of them for you. And all right, just give it a couple more seconds to load up. All right, just give me a few seconds, guys. Sorry about this. All right, but anyways, in the meantime, you could go and get the actual presentation, which will probably get faster. All right, here we go. Yay. I'm finally opening up. Okay, here we go. All right, so here is a better viewpoint, right? So here we have a pretty significant, really grindy, boring sideways market, right? And then we have this massive jump up. And this is, like I was saying before, this is where I am standing and waiting for my trade. Look at this. Look at this massive movement of the MACDs. This is where I see that, for instance, if you're a jogger, you're like, hey, I am ready to go some more, and you just take off, right? So this is how I gauge the market, right? And then you have all this movement up, and all of a sudden, at this point, with the breakouts, I only really look for the very first hit because it's a much higher probability that it's not going to go that far, right? Because at that point, it's like your second wind, and you simply get tired. Okay, so I want to show you another one. I call this the initial instant reaction trade. All right, so what happens here is we have this particular area, right? Look at this area. So we have a pretty strong movement here, and now the market is starting to become divergent. And here's that head and shoulders that I'm talking about. You see shoulder, head, and then this shoulder right here, kind of to tell me, wait a minute, it's not really going any far. And look at the divergence between here and here, right? It's not that big of a difference here, but it's massive on the MACDs, right? So showing me that the strength is completely dying. It's completely hovering over the 0 line, just kind of hanging out there, right? And then it doesn't really go very far here. It's kind of hanging out, going back and forth. It's kind of hitting that area, and then it decides to go through again. And this is where I want to get in. And remember what I mentioned when you're jogging, when you first get out that door, look at that. This is common behavior, right? You have a lot more strength in that new first move. So here's another example of exactly what I'm talking about right here. Right. So I have this, look at this massive sideways movement. Look at the massive divergences all around there. And even here, look at these divergences. They're all hitting, the pivots are all hitting here, but none of them are hitting here, right? So I am just being told through the signs that something is totally off. And then all of a sudden it breaks through all of this. This is where I'm sitting, because these lines that I have drawn, these are my own like little symbols that I use to show me that if they're around here, the strength of the market is really strong. And if it doesn't even retrace further than this, I'm so in a trade, right? Because this is the beginning of that new trend. The chance of it running for quite some time is really strong. But look at this, right? All of a sudden it continues down, but it doesn't really continue down here, and it gets even less here. So this is when the market is already telling me, hey Marina, chill out. I'm probably going to be going into either a new trend reversal, or I'm going to be kind of in like a sideways indecision area. And look what happens. This grindy behavior, nobody could win in this grindy behavior, right? With massive divergences until this massive pop out. So this is how I read the market, right? So again, please remember, you could get all of this, and you could send me your charts so I could help you as well gauge. I know that some people have a little bit of a hard time understanding exactly divergences and reversal patterns. So I'm really happy to help you. You can find everything here, makingofadaytrader.com. Okay, so let me just see here. All right, I have a few more minutes that I could chat with you guys. I want to talk to you about the E-minis. I know that a lot of people wonder how I got into the futures ES mini market, because it sounds kind of like, oh my God, what is that? A lot of people, especially women, we don't really know about this market. And to be honest with you, after I stumbled upon it, I can't believe that everybody isn't doing the ES futures, simply because of the benefits that go with it. So why did I decide on the ES mini futures? So 8 years ago, actually on my 40th birthday, is when I went all in, after I'd been really trying to figure out what I wanted to trade. I was really looking at penny stocks, and I was on the fence between penny stocks until futures came in, and I realized what they were, right? So the ES minis is literally, like I said, it is watching the S&P 500 index. And when you start with, let's say, stocks or even Forex or options, you need quite a lot of capital to get started. If you want to do equities, you need $25,000 period in your account. But if you do E-minis, you could start with $1,000. Actually, you could start with $500. I personally recommend 1,000, simply because you do need a little bit more of that buffer in there, but you don't need more than that, right? Another thing with trading stocks or options and Forex, there's too much drama constantly going on, right? You really don't know what's going on. Like today, Japan and the US might be the best of friends overnight. You know, they might be rival enemies, and you're sitting in a pair with, you know, the yen and the dollar, and all of a sudden there's no understanding, but it's completely off all of your ideas of what you were doing with Forex, right? So there's just a little bit too much drama there. And with stocks as well, right? Amazon, for instance, you know, when Jeff Bezos, Amazon's probably the strongest company we have right now with Apple, right? When Jeff Bezos and his wife were getting a divorce, the stock was, you know, tanking. Why? Who cares? But for some reason it matters. It doesn't matter how much research you have put into understanding that stock, and because it's a solid stock. So on top of the 2-3 hours a day of research you need to do, because there could be earning reports or whatnot, there's all this drama that you have absolutely no access to, basically, right? With the E-minis, with the S&P 500, it's almost impossible for the drama to give you that much impact on 500 companies, right? So if the market is going to go down, it's kind of an overall thing. So you could watch it with and learn and do it with the technicals. And the technicals is what I was showing you today, right? Those reversal patterns, the support and resistance areas, right? The other thing is, a stock trader, and even Forex, because a lot of people who like to trade Forex, they like to have different pairs. They have several charts going on with quite a few different indicators going on. And that to me could really be stressful, because Apple does not move anything like IBM, right? So I have to completely refocus every time I look at a different position. And it was just too difficult for me. With the E-minis, it's one chart. I use one chart. You guys saw the chart that I use. That's it. And I could take it anywhere in the world. I don't need to have several monitors and several charts blinking differently. And that really, really made a difference for me, right? And overall, the average trader, stock trader, Forex, options, they really have to put in a lot of research to really understand what they're doing in the analysis. And with an E-mini, you really don't, because there's really not much for you to analyze. You open your charts and you just really read what the market is telling you. And that really helps, right? And the best part of it all is that because I am a scalper, I really focus on the market.
Marina, we cannot hear you. Just a quick sound check, guys. Can you hear Marina?
Hey, Anka, no. I can hear you, but yeah.
Yeah, I cannot hear Marina.
Went out. No. She was having other computer problems.
I'm going to type it with caps in the room.
And that link that she has does not appear to be working for me, at least.
Okay, Marina, if you hear us. It may be the microphone acting up. Oh, okay. Yeah, I get it. Okay. Conrad is saying that there is a thunderstorm in Guatemala, so probably she lost connection, temporary lost connection. Okay, so David, is the link working, or you said that there are some issues?
Yeah, that link she has in her presentation is not working for me, at least. A few other people said something in the chat about her link not working as well. So,
do you have her phone number? Maybe we can text her.
No,
Let me try to
usually just
her via Twitter.
Talk to her by email. Oh, now she left the room.
Lost connection.
Yeah.
Yeah. No, I can't contact her via Twitter.
Her her time's almost up anyway, so I'm just gonna go ahead and stop the